Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We are on location this week. National Association of Farm Broadcasting Annual Convention number 80 is taking place in Kansas City, Missouri. So we're going to do kind of a split report on this. You're going to see Josh joining me here in just a moment as we talk about what's happening in the world of fertilizer, and then Arlan Suderman will be stepping in for the second half as we dive into this crazy week we've had so far in this market trade. Stick around. You're not going to want to miss this fertilizer update coming up after this.
Imagine a future fueled by soy-based possibilities. A future where creativity and productivity live together under one roof. A future that takes you from point A to point B to point Z, all while ensuring brighter tomorrows for our next generation. A soy-based future? It's already here.
And welcome back once again. As I mentioned, Josh, very much in the intro, Josh Linville joins us. He is the fertilizer expertise when it comes to what's going on. He is my go-to man with updates and emails that you send out, really keeping us up to speed on what's happening in the fertilizer industry. And I want to kind of talk about what the heck is going on right now with China.
Well, China decided that they're going to take their ball and they're going to go home. They don't want to export to the rest of the world. So, India is something we always talk quite a bit about in the urea marketplace, right? They're a major buyer. They go big swings, big tons. This last tender, they bought just shy of 1.8 million tons. And what we found out during the process of receiving the offers, the Chinese government stepped in and said, yeah, no, we're not participating. And they largely blocked it. And that's part of the problem with China. Number one, it's a country we don't get a lot of good intel from. It's on purpose, right? And B, because they are such a large player in the fertilizer market, when they make these types of moves, it's a game changer. You know, we're sitting there looking at them, and all of a sudden, they stopped participating in the export market for urea. And all of a sudden, the S&D tightens up quite a bit. Well, here recently, they've done the same thing on phosphate. Now, on the urea side, they're a major player, about 5.5 million tons of exports per year. Phosphate, they're the single largest producer and the single largest exporter of DAP and MAP in the world. They're gone. So just like that, one central government verdict restriction, and all of a sudden the global phosphate market all of a sudden looks a little more firm.
So what does that mean to the producer who's listening to you talk about this, and what does that mean for them not only in the fall, but what we see going into 24?
There was hope before that happened that we would see some weakness in phosphate values between now and spring. I was really, really hopeful for it. If you look at phosphate prices today, they are very low compared to where they were in March, April 2022, but they're still historically high and even high versus grain values. We were hoping for some bearishness. Unfortunately, I'm not there anymore. Looking forward, looking at some of my forecasts, I don't know that we're going to see prices rally, get out of hand or anything, but it's really hard to see prices falling between now and next spring.
So for a while, we had such a conversation and a focus on what was happening between Russia and Ukraine and the movement of fertilizer there. Not so much an issue anymore.
It's not. When the Russia situation first started, there was a lot of fear because we didn't know what was going to happen. They had invaded Ukraine. The world cried out all at the same time. And there's a growing argument that we're not going to do business with Russia. And Russia's a major player on all three major nitrogen, phosphate, and potash. That is what really helped drive the prices up. We have since normalized that. We know we're getting product from Russia. They're continuing to export. So while the war is still going on, and we're still watching it very, very closely because that can be a huge game changer. For right now, it's not. It's on the list, but it's not triggered yet. The bigger issue has become the Israel-Palestinian war. Now, directly, there's not a lot of nitrogen produced. There's phosphate produced. Israel is the fourth largest exporter of potash in the world. But it's the wider picture. When you start to look at the region, you start to think what would happen if North Africa and the Middle East region started to get into the middle of it. What are the impacts on the energy markets? There's all of these outside influences that have a very direct impact on fertilizer values.
And we know that's such an integral part of our profitability within these crops.
Right. And that's the thing. Fertilizer, that's a big reason why we do this. Growing up, fertilizer was the number one cost per acre input for the farm. Didn't know anything about it. So that's a lot of the reason why we do this. It's not going to sit there and be 100% accurate, right? I compare myself to a weatherman sometimes. I'm about that accurate, it seems like. But at least we know why and what to watch for. I can tell you, every morning I wake up and I pull up the news agencies and I look to see, did Iran launch a rocket? Did Syria do something? Because if this thing starts to expand, my nitrogen outlook, which is a little bit bearish right now, flat to bearish, just like that turns bullish.
So as we wrap this up, Josh, what should a grower be looking at right now if they haven't locked in some prices, if they're trying to think of a different fertilizer option for them? What should they be doing?
They need to be talking to the retailer. This, like I said, we are not over the cliff like we were, but we are very, very close to the edge. And just in a matter of hours, the entire outlook can change. The entire structure of the market can change. So have those conversations, because that retailer is also looking at the same kind of price risk and doesn't know what to do on their side. The more conversations, the more willing they are to bring product in, to get stuff ready to go. We also need to continue to look at how do we take risk off the table. We're always trying to call the high of the grain market the low of the fertilizer market. I'd love to be able to do that. I'd love to be able to tell everybody exactly when to buy. I don't have a beach house anywhere in the world. I don't make that kind of money. But what we do know is when the price of fertilizer gets down to value, that makes a lot of sense versus the grain. We buy the fertilizer, we sell the grain, we lock in that profit. Now, yeah, there's plenty of other inputs that we have to consider, but that's what we're looking at.
All right. Best way for folks to get a hold of you, have more conversation.
Yeah, reach out. Go to the StoneX website. Reach me at Josh Linville at StoneX.com. I'm always around.
All right. Thanks so much. Josh Linville's been joining us. Stick around. Arlan Suderman's going to be stepping in here momentarily as we take a look at this week's markets. Oh, we're switching gears now. Let the guys switch places, and we're now getting a chance to talk with Arlan Suderman. Of course, Arlan also with StoneX, and you and I had a conversation on Thursday about what was going on with all the weather situations in Brazil, and we know that's going to continue to weigh. Give me a little spin on what you're seeing and all the chat. Excuse me, and how maybe we shouldn't always be trusting what we see on social media.
Well, it's just kind of like here in the U.S. Midwest. There's usually an area of the Midwest that has dry weather every year, and people in that area will take pictures of crops burning up and put it in social media. And we get the sense that, the whole Midwest must be dry. And same thing happens in Brazil. The same thing. I don't blame them for that. That you want the rest of the world to know how you're struggling in your area with the weather, but it gives the wrong impression. And in this day of social media, we need to have that perspective of what's the broader picture. First of all, it's extremely wet in southern Brazil. And unlike here, when soybeans have wet feet, they don't tend to do well. It's hard to find a year when southern Brazil's had extreme wet weather when they didn't have trend or higher yields. You just can't. They tend to be above trend yields there. Rain makes grain. And the other thing, to the north, it's dry. Center west, Mato Grosso. Mato Grosso is 1.3 times the size of the state of Texas. So you can have some very dry areas and some wet areas, and all in the same state, and be far away from each other or even close by. It has been less organized. It is drier than normal in Mato Grosso and the surrounding areas of center west Brazil. This is probably most like the 15-16 growing season. Very wet in the south, dry in the north. The weather pattern has been very similar. That year, center west Brazil saw 11% below trend yields. Southern Brazil, 9% above trend. Northeast Brazil, 40% below trend. Nationally, about 9% below trend. And so if that would translate into about 148, 149 million metric tons, down from 163 million metric tons currently expected. Well, there's enough soybeans in the world now to deal with that without us having to increase exports. And so that isn't necessarily enough to justify higher prices to ration demand. Now, may it get worse? Yeah, it may. We just don't have any evidence of that. In fact, we've got some very good rains coming here in the next few days. Probably turn hot and dry again after that, but those rains are going to buy us some time.
So it's interesting that how, just like when we had the issues with the weather here in the States, now we're seeing the same type of issue happening in Brazil, and the market's still pretty much reacting the same way.
Yeah. When the forecasts go dry, the prices go up. When it goes down, they go down. When it goes drier or wetter, they go down. And the algos amplify the move. And that's something to keep in mind. Big moves are far more common in today's markets. Watch the bigger trend. But don't take your eyes off of those November soybeans or December corn contracts either. We've gotten used to having several years of a profitable part of the cycle. And I think we're transitioning to a more difficult time of the cycle now. Where we have to be more strategic in trying to protect the equity that we've built over the last few years.
What about China? How are they working into this picture, and are they going to start coming back more to the United States?
Hey, I'm not optimistic about that. They will come here for what they need and when it's cheaper. But with the currency exchange rates being what it is, when Brazil has supplies, they're generally cheaper. And a good example of that is October, November, December, which we used to own that time period for shipping to China. This year, the soybeans booked for China shipment, 50% were from Brazil during that time period, which used to be our primary time. Brazil, even no matter what the size of the crop is, they're going to start harvesting in early January and start moving those soybeans to the ports and loading them up 45 days later than they'll be at Chinese ports. So our window may be a little bit wider this year, but overall, Brazil will have soybeans to export again come first of the year.
We can't leave this conversation without talking a little bit about the livestock. So on a Thursday, when you and I are recording this, it was a huge struggle for the cattle market. It feels like that momentum is going to continue for a while.
Yeah, certainly did a lot of chart damage once again. Consumer worries about the health of the consumer, some of the economic data we got out. Certainly expectations, and I think this time the funds saw the big sell-off after the last cattle and feed report. Now they're looking to get ahead of that, and the expectations of Friday's report being another bearish one.
And of course, we won't have those numbers anytime till after this report is done between you and I. But what are you looking forward to holiday week and post-Thanksgiving, grain or livestock?
Well, I think it's going to be Brazil's going to be the big story, and how that weather pattern plays out. That's really going to set the tone for the grain and oilseed sector as a whole.
All right. We've got a lot that's been taking place. Arlan, what's the best way for folks to have a conversation with you?
Over on StoneX, or they can reach me on Twitter. They can direct message me there. My handle is Arlan, Arlan FF 101.
All right. That has been this week's Nebraska Soybean Board Weekly Market Roundup. As we always remind you, the commodity futures involve a substantial risk of loss not suitable to all investors. And that's this week's Nebraska Soybean Board Weekly Market Roundup.